What's up, my people? Welcome to the channel. So in this video we're going to be going through exactly how I plan my week. There's a popular saying that if you fail to plan, you're planning to fail, and proper preparation prevents poor performance. So there's nothing that happens in my trading career or in my business career by chance. I plan every bit, and today I want us to plan together. I want to be showing you guys the setups. I'm giving you guys free signals on this video, so before the end you're going to be seeing all the trades you're going to be taking this coming week on your Pro Firm account, on your private account, or whatsoever account you're trading. I'm also going to be showing you guys how I generated the signals so that you can do the same. At the end of the week, I want you guys to have a testimonial like this one right here. So before we even start the video, let's just quickly read the testimonial. As we speak, this testimonial was almost about 3 weeks or about a month ago, and as we speak, this guy just received his very first payout in Forex trading with zero mentor, using only my YouTube channel. So are you going to be the next? So pay attention. Let's just quickly read the testimony, and then we're going to jump on the video on what we're going to be doing today, right? So it says, you make me trading demo, and these 2 weeks I won every day except for 2 loss. So he said it's because of my YouTube channel that he started trading on demo, and he's won all his trade except 2 losses he had. I just use support and resistance from your videos. I'm all the way far away from your location. I've never seen this person. Maybe this person is in a different continent, and you see he just received his first payout. He sent me a screenshot on Instagram just a few hours ago, and I was like, let me come back from the root. Let me come back to the root comment. If you can make me win in Forex trading in my country, it will be a miracle, because I will help my people from day and night learning from you. That means I'll be the first in history to do it in my country. So you can continue reading the comment. But as we speak, this person is a success as we speak. He got his first payout a few days ago, and he sent me a screenshot on Instagram. He was so happy. So you are the only one who watches my YouTube channel just for entertainment. People come here because they are destined to find my YouTube channel. They watch my YouTube channel because what I share on my channel, you can't find it anywhere on YouTube. You can't find it. It's not noise. It's not noise you're going to see on other channels. It's not noise you're going to see on blogs. No, I show you guys exactly what, if you follow, you're going to be successful in Forex trading. So without taking much time, let's just jump on my computer, and I'm going to be sharing with you guys all the trade. And please, just to show me that you want to be another testimony, just to show me that by next week you want to be able to share your own story, make sure you follow this video to the end. All right, this is very important. Just show me that you're going to be, make sure you follow the video to the end, like, subscribe to the channel, and share with someone. Let's go. We're going to be going through all my currency pairs, everything on my watch list. It's not just that kind of video where I just come here and I say, no, let's just quickly pick just this one. No, we're going to be going through all the assets I have on my watch list. The first one I just want us to start is what is taking the internet by storm, which is Bitcoin. All right, which is Bitcoin. As we speak, Bitcoin just crossed $19,000. 19,000 as we speak. Look, BTC is on $19,100 as we speak. That's crazy. That's the all-time high for Bitcoin. So what's the future of Bitcoin? For most of you guys who trade it, you can still trade Bitcoin in Forex. You mustn't say, no, you need to have millions. No, I have positions up and running on Bitcoin as we speak over the weekend. And I think I'm almost up by about $10,000 on both positions. So I'm just going to check the screenshot to show you guys if you guys can see those trades. But that's Bitcoin almost about $10,000 up. So let's start with that one. Since Bitcoin has made it all-time high, when is it reasonable for us to jump into the trade? Just bear with me, guys. I'm actually recording from my home office, and my kids are downstairs playing. My cousins also came around, so please just bear with me. Just bear with me. Let's allow them to do their thing while we do our own thing. All right. So when can you jump into this particular trend? Because you might be coming to say you want to buy BTC when it's already late. When can you jump into the trend? The strategy we're going to be using here is obviously our popular GUMVRO. That's the strategy that has created the highest millionaires, both in Hola University and also on YouTube. Talking about Hola University, If you want me to mentor you one-on-one, if you want me to hold your hand, show you what's working, check out Hola University. As little as $125 a month, you can get access to my mentorship. Now, let's go into this. We're going to be using this strategy, GUMVR, just stands for Hola University Moving Average Strategy. And there's two steps we use on this strategy. The first step is to determine the market direction. Market direction is determined by the cross of what? It's determined by the cross of the moving averages. So we already confirmed here that the recent cross, the most recent cross was here. Why this one for this particular trend that the market has been going up, the cross was right down here. Look, the cross was right down here when the price was still on $108,000. So if you bought BTC on $108,000, according to this strategy, you would have still been holding that BTC until when it got to $118,000. According to the strategy, because you can see from $108,000, all the two moving averages, so long as you see the two moving averages sloping upward like this, so long as you see them like this, where the fast moving average is above the slow moving average, that's an uptrend. And you can see right from here, it has been like that. This moving average, the fast moving average, has been above the slow moving average for the entire time. So long as you see it staying like that, that's an uptrend. The opposite will happen for a downtrend when you see something like this. Let's just look for where we actually had a downtrend. You can see for this one, we had a cross right here, and we had the slow moving average above the fast moving average. You have the 23 exponential moving average above the 10 exponential moving average. So in that case, when you see it sloping downward, it's a downtrend, unless you have a cross. See, as easy as that. You don't even need any extra tool to see what's happening on your chart. So the most recent cross is right here. So as we speak, we are still in a bullish trend on BTC. That's the first thing you confirm. If you join early when the cross is just happening, you can jump in that particular trade. But if it's already gone, if the trade has already gone, then now what will help you to know what time to jump into that trend is what we call the Fibonacci tool. So we need to obviously bring our Fibonacci tool at this point in time. All right, let's just zoom this in. We need to bring in our Fibonacci tool to see when we're going to be jumping. And you see from the Fibonacci, we just go from the most recent swing low to the most recent swing high. Assuming the market is going to tank at this point, this will form our most recent swing high. So we draw our fibs from here to here. Remember, we're using the 1 hour time frame, and wait for the market to pull back to our 38% level, 50% level, or 61% level, and then close bullish again. That's very, very important, all right? So assuming that was our high of the market, but from what I'm seeing, this market is still going to go up. The high is still going to be somewhere up here. So that's where you're going to be drawing your fibs from here to here, and then you expect to see something like this. This market will still go like this, and then before you see it bouncing back to around this area. So long as it closes anywhere within this area, 38%, so you can call it the 38 or the 0.38, the 50% or the 0.5, 0.61 or the 61% level. So long as it gets here and then you see it closing bullish, that's an entry. So you're going to enter somewhere here. That's where you're going to enter on a long position, somewhere here. As soon as it gets there, stop loss just go below that swing, and then you go for a risk to reward of 1:2. That's a cool trade. That's what we're going to be watching. That's a signal I'm already showing you guys. That's what we're going to be watching and waiting for it to happen within the week. Anytime it happens within the week, we're going to be taking that trade. Remember, more money is made in Forex trading waiting than actually trading. Don't trade out of boredom. Don't trade just because you've sat for 2 days and you haven't gotten a setup. Just don't trade just because you've sat for 3 hours and you haven't gotten a setup. No. More money is made waiting than actually trading in Forex trading. So that's a setup on BTC and what we're going to be waiting. So we're going to update you guys as we go within the week. Let's quickly go now. Let's start from the top. Let's start from master gold. So gold, what is actually happening on gold? Remember our 3-step process. Step number 1 is determine for this strategy is simple. Determine the moving average cross. All right, that's step number 1. Step number 2 is market direction. Step number 3 is look for an entry. And step number 4 is calculate your risks. calculate your risks, and number 5, use the Fibonacci. I'm just going to call it Fibs if cross has already happened. So going ahead, these are the steps on this simple strategy. The video is already on this particular channel showing you guys step by step how this strategy works. But these are just the 5 steps of the strategy. Number 1 is to determine the moving average cross. In our case, this was where we had the moving average cross. So we've been on a bullish trend on gold since Thursday last week. We've been on a bullish trend. You can see this is a clear bullish trend. So long as you see the moving averages sloping upward as explained earlier, where the fast moving average is above the slow moving average. It's an uptrend. The fast moving average is a moving average with a period 10. The exponential moving average with a period 10, while the slow moving average is the exponential moving average with a period 23. The one with the smaller period is the faster moving average because it responds quicker to price changes. Because that's one big confusion you guys have always had. You're going to learn a lot from this video. Before the end of the video, trust me, you're going to learn a lot. It's more than just analysis. You're going to learn a lot. When it comes to trading, moving averages, remember, it measures the median price changes of a particular asset within a particular period. If you did something like economics, where they will ask you to measure the correlation within a particular period, you will need to obviously put a dot, and then if that price is, the average of that price is in an incremental period, that's where you have the moving average sloping upward. Then in a case where the price is in a decremental period, you have the moving average like this. That's just how moving averages are formed. So it's not just one magical line drawn on your chart. It actually plots the price of that particular asset. And the smaller the period, the quicker it responds to price changes. That's why the exponential moving average with a period 10 is faster than the exponential moving average with a period 23. Now, those are all the steps. So our first step is to determine the moving average cross. It was right here. Second step is to determine our market direction. So our market direction, we've already confirmed that it's a bullish trend. And then, since we've confirmed that it's a bullish trend, when is it best for us to jump into this particular trade? We're going to use our Fibonacci tool to know when best we can jump into this trade, where number 1, we're going to determine our most recent. Remember, we're talking about most recent. We're going to determine our most recent swing low, and number 2, we're going to determine our most recent swing high. All right, most recent swing low, most recent swing high. Since we've known those areas, we're going to now draw our fibs from our most recent swing low to our most recent swing high. So clearly you can see we still have to wait. As soon as the Forex market opens, we have to wait for the price to push right down to our 38% level, 50 or 61% level, and then close bullish. So we're just going to wait for the market to do something like this, maybe come right down somewhere here, and then we look for a bullish. So long as a close bullish, we're going to be entering a buy somewhere here, stop loss just below that swing, and then we go for a risk to reward of 1:2. That's a simple trade we're waiting on gold. So we're going to wait to see what's going to happen at the open of the market. And if the market opens and the price doesn't pull down as we expect and continue going up, then voila, the price is going to go up, form another most recent swing high, and then this one now is going to instead act as our most recent swing low. This one up here will act as our most recent swing high, and then our fib will instead run from here to that point, and then we'll wait for the market to push back to our fibs level, and then we get another entry as a buy. So we keep looking for buy opportunities unless the moving averages have crossed, unless the market has shown us that, okay, we are now in a downtrend. We only want to trade in the direction of the trend. We only want to trade in the direction of the flow of the water, we don't want to swim against the flow, right? If the water is flowing downstream and you are trying to swim upstream, you know how difficult it is. It's the same thing in trading. If the market is in an uptrend, don't be looking for sell trade. If it's in a downtrend, don't be looking for buy trade. Trade with the direction. The trend is your friend. So that's what we're going to do on gold. We're going to wait. If the market opens and it pulls back to our fibs, we're going to be waiting for the next candle that's going to close bullish. Then we'll enter on the bullish trend. If it doesn't push to our fibs and continue going up, then voila, no problem. Maybe by the end of Monday or Tuesday, it's going to form another high. Then that's going to become our most recent swing high. Then our fib is going to run from our most recent swing low to our most recent swing high. We're going to wait for a pullback, jump in again. More money is made in Forex trading waiting than actually trading. Don't trade out of boredom. So that is that for gold. Then let's go to Euro USD. We just go according to how frequent. So Euro USD, we're just going to follow our three-step process. Step number one, what is the direction of the market? We had a cross somewhere here. So this was our cross. If you entered this trade immediately at the cross, you would have entered a sell. By the close of this candle, you would have confirmed a sell. Stop loss would have gone somewhere here. Would have risked maybe about 18 pips or 17 pips. Go for a risk to reward of 1:2. Boom, you would have already been out of this trade somewhere there. All right. As soon as you are out of this trade, when was it a good time for you to jump into the trend again? You can see very, very clearly. Let me delete this. That we had our most recent swing low somewhere here. This would have been our most recent swing low, most recent swing high. So as soon as this market started retracing, remember the reason why we are using the Fibonacci is to know the extent at which the market can retrace against the original trend before resuming the original direction. So you see the market going down like this, like this, like this, and then you see it start going like this. You don't know how far this retracement is going to go before the downtrend is going to resume. So that's why you then bring your fib. Your fib will run from this most recent swing low to this most recent swing high, and then what will happen? You wait to see if it's going to pull up to your 38%, 50 or this, and then close bullish. In our case, you would have seen, would have entered right here on a sell, stop loss go there, and then we continue selling. That's just how we use. That's the reason for using the Fibonacci tool. So in our case, this would have been our most recent swing low, most recent swing high. Our fib would have run from there to here, and you can see very, very clearly the market push right up to our 50% level and then close bearish. Close bearish. The close of this bearish candle would have been our sell signal. Let me show you guys how sweet this strategy is. So we would have sell right here. Stop loss just go above that swing. So we would have risked about 12 pips on this particular trade and then go for a risk to reward of 1:2. Boom. Just one candle. 1 hour after that, we already hit our TP. That is it. 1 hour after that, we already hit TP on this particular trade. Just following the methodology, going it step by step. And remember, for proper risk management, I always advise go for a risk to reward of 1:2. Meaning if you are risking 1% of your account, go for 2%. If you are risking 2% of your account, go for 4%. If you are risking 1.5% of your account, go for 3%. Going for a risk to reward of at least 1:2 gives you that confidence to tell you that even if I have just a win rate of 40%, I'll still be making money. Let's do the math. If I have a win rate of 1:2 and I have a 40% win rate, and let's just say I take a total of 10 trades, it means just 40% of those trades are correct, meaning 4 of my trades are correct. So 4 times 2, meaning if I'm risking 1%, I'm going for 2%, I'll then make 4 trades times 2%. So I made 8% of my account. But remember, I lose 60% of my account. So I lose 6 trades. And how much percent was I risking per trade? I was risking 1% per trade. So 1% times 6, I just lost 6%. And then what did I make? I made 8% on the ones I won. So at the end of the day, what is my net profit? That's what they call it, net profit of the day. You just subtract what you lose from what were actually your winners. So if I subtract 6 from 8, I ended the day with positive 2%, with plus 2%. Show me someone who can earn even his week or even his month with plus 2%, and I'll show you a multi-forex millionaire. You just need a bigger account size at that point in time, and you never worry about money again. If it was on a $100,000 account, you just ended that day with plus $2,000. If it was on a $1 million account, you just ended that day with plus $20,000. Think of trading as a game of numbers the moment you become profitable. So that is it. That is it. We would have already gotten out of this trade right here, and then again we wait for another swing. This would have acted as our most recent swing low, this acted as our most recent swing high, and then this one I can see, this one, if we can bring our fibs from here to our most recent swing, you would have seen this one would have been a loss because we would have sold somewhere here. Would have sold somewhere here, this one would have been a loss. It's very, very fine. You're going to have losers. All right, you're going to have losers, but with proper risk management, you're going to know you make money at the end of the day. So now this is where we're standing on Euro USD. What will happen at the open of the market? We're not going to be taking a trade immediately. We're going to wait for the market to do this, to continue printing down, and if we see it start pulling against the original trend, remember the original trend is a bearish trend. If we see it start pushing against the original trend, Our most recent swing low was right here. You can see there's a wick here. So I'm just going to delete this so that you guys can see very clearly. All right, so let me just delete this. Let me delete that. And then I'm also going to delete this fib. So we can see very clearly that there was a wick, right? So you use the wick. There was a wick here. So if the market goes in our favor, which is in the original direction of the trend, and start pulling against the trend, what we're going to do is this will become our most recent swing low. So our fib will just run from here to here, and then we'll wait for the market to push back to our fibs level, and we'll look for another sell opportunity. But if that doesn't happen, and the market instead open and you see it way down like this, and then boom, you just wait down for the moving average cross. When the fast moving average cross over the slow moving average from above, and then you enter on a buy trade. Once you already enter on a buy trade, for the entire week, you only be looking for buy opportunities unless the moving averages have crossed again, when you see the fast moving average crossing over the slow moving average from above. Simple. Methodology simple. We're just following our plan. We're not worried about the outcome of a trade. You can't control the outcome. You can't C-A-N-T. You cannot control the outcome of a trade. But what you can control is being disciplined, following your system religiously. So that is that for Euro USD. Let's go to USD JPY. USD JPY, remember, this is a video you should always come back to this video to watch as many times as possible, because this is not just only about planning for the week. This is about showing you how to trade as a profitable trader, showing you how to trade as a Forex millionaire. Simple. First step, we had our cross right here. Our most recent swing low was here. Most recent swing high was right here. So at the open of the market, we're going to plop our fibs from here to here, and we're still waiting. At the open of the market, we're going to wait for the market to do like this, push right down to our 38% level, this or this, and then close bullish. So we're going to be looking to enter on a buy right at this particular zone. Stop loss will go somewhere here, and we go for a risk to reward of 1:2. That's if the market push down right down to our fibs level. If the market doesn't push right down to our fibs level, and the market open and you see it continue going up like this, and then we're going to wait for that moment where the market start pushing against the original trend or against the market trend, which is a buy trend. Then this area is going to still act as our most recent swing low, and then this will act as our most recent swing high. Wait for the market to pull down to our fibs level, and we buy. You can see in that case we're looking for a buy. Meanwhile, in Euro USD we're looking for a sell. Why? Because the market is in a sell trend. We only trade in the direction of the trend. Great Britain pound JPY, I don't even need to go far. I can already see a trade we're going to take at the open of the market. So we had this clear confirmation right here. This was our cross right here to confirm the direction of the market. But then pay attention to this area right here. Pay attention to this area right here, which is our key. That area, that zone, I like to call it the zone. Pay attention to this zone, this support zone, this our support zone, and this our resistance zone. These two zones, very, very important. So, in most cases, if I want to use too many points of confluences, I'll wait for this market to push down to my zones, and I'll always try to look for a buy opportunity. As soon as the market comes down here and I get a bullish candle, I'll be using, that's if I'm using support and resistance. But don't get yourself confused. If you're using support and resistance, then as soon as the market opens, wait for the market to continue pushing down to this area. At that point in time, you're not looking at the moving averages. You are just using your support and resistance, because you can see there's been a support there, there's been a support here, there's been a support here. There's been a resistance here, resistance here, resistance here, and a resistance here. So I don't know if it makes sense, all right? So in that case, you are just using your support and resistance, not the moving average. So if you have to use your support and resistance as soon as the market opens, be patient for the market to either push right back to your support for you to buy, or go up to your resistance for you to sell. But if you want to use GUMV arrow, at the open of the market, if we can bring our fibs from our most recent swing low to most recent swing high, you can see the market has already pushed right down to our 38% level. So we are just waiting for a bullish candle close, because you can see we are in a bullish trend. The moving average cross here, and we're in a bullish trend. So if we just have one bullish candle, the next candle that closes as a bullish candle, we're going to be entering on a buy. Simple. Take note, that's the signal I'm already giving here. We're going to be entering on a buy, our stop loss will just go below that particular candle or below that particular swing, not right down here. So if we're entering, let's just say the long candle, the market opened and we had a long candle that closed somewhere there, our stop loss will just go somewhere here on about 20 pips. On about 20 pips, and we go for a risk to reward of 1:2. So in that case, you can see risk to reward of 1:2, our take profit is still going to be around that key zone. So even if the market is still going to respect this support and resistance, we'll already be out of the trade before the trend changes, before the direction of the market changes. That's a good trade. That's a good signal I'm already giving you guys. Great Britain pound card. Damn it. Can you see this downtrend? Can you see this downtrend? Perfect, perfect. The first thing we determine market direction. The cross was right here. If you were to enter on this trade on the cross, by the close of this candle here, you would have confirmed your cross. So your stop loss would have just been here on 29 pips, and you go for a risk to reward of 1:2, meaning you would have already been out of this trade ever since. You can see this would have knocked you out of the trade, or you would have already hit your TP. But let's see what's happening as we speak. We are still in a downtrend. When you see your two moving averages sloping downward, your slow moving average above your fast moving average. That's a clear downtrend, right? So what should happen now? This is our cross. We're in a downtrend. Where is our most significant swing low? Most significant swing low is there. Most significant swing high is there. So if you can plot our fibs from here to here, you can see the market already, the market did push right up to our fibs level of 38% level and close bearish. So we would have entered on a sell right here. This is where we would have entered the sell. Stop loss just here on 33 pips, and we go for a risk to reward of 1:2. So you can see the price is still around that same area. Our price is still around that same area. So if the market opens and you see again a little bit of pushback, you see a little bit of pushback to this particular area, you can still jump on this particular trade. You can still jump on a sell. Stop loss goes around here because the structure is not yet violated. So you can still jump on a sell, and then you are trading in the direction of the market. But if the market open and you just continue pushing and going down without even giving you the opportunity to enter on the trade, then play the waiting game. More money is made waiting than actually trading. So don't hurry. The market open and you just continue pushing down without giving you that opportunity to jump in. Just play the waiting game. Wait for the market to start pulling against you, where you can use that as your most recent swing low and wait for a good entry. So that's what we're going to be doing for Great Britain pound card. Let's go to Great Britain pound JPY. I know most of you guys trade Great Britain pound JPY or Great Britain pound CHF, right? I won't even waste time on this one because the same setup I used last week is still standing right there. So we had our cross right here. Simple. If you would have entered here, you would have already been out of the trade. Your second trade, if you can put your fibs, this is my fibs right here. All right, this is my fibs from my most recent swing low to my most recent swing high right here. And you can see the market push right up to my fibs level and then close bearish. So I already entered on this particular trade as we speak. So these are just one of those trades where I allow them to go over the weekend. I'm already in profit of almost about 20 pips on or 18 pips on this particular trade. So if the market opens and you get a pullback right back to this particular zone, you can still look to enter a sell on the trade. But if the market opens and you see it just continue pushing down, you just do what I told you guys, to wait for it to start pushing, to start the retracing, and you bring in your fibs to look for another entry. Great Britain pound NZD, similar. Remember, this is Great Britain pound, so you expect a similar pattern on all. So Great Britain pound NZD, the same thing. We had our cross right here. Boom, this was where we had our cross. Our most recent swing low is going to be here. Our most recent swing high is going to be here. So the most recent trade would have been this particular one. So coming here and closes this bearish trade, that is the most recent trade would have already been in as we speak on a sell. Stop loss here, risk to reward of 1:2. So it have already been this trade. There's nothing we can do now at the open of the market. We're just going to wait. If the market can push back to this same zone again, to this same red zone, and close again as a bearish candle, we can look to sell. But if the market open and you see it just continue pushing down, then you wait until it brings you the most recent swing high And then your fib will instead run from here, most recent swing low, to most recent swing high, for you to look for another opportunity. And if the market push back to this area and it doesn't give you a sell opportunity, or it doesn't close as a bearish candle and just continue going up, and then obviously, at the point in time, you have this cross. You have the moving average cross where you get now a confirmation of a bullish trend. So long as you get a confirmation of a bullish trend, you're only going to be looking for a buy trade. Simple. USD JPY. Wow. This is awesome. Just looking at the trend, this was our clear uptrend right here. We had a cross right here. Our most recent swing low is here, and our most recent swing high. Let me just push this. Our most recent swing high is right here. So we can bring our fib, it will just run down from here to here, and we need to play the waiting game. At the open of the market, if I can just extend this, at the open of the market, we can see something like this. Where the market continue pushing down. So we are waiting for the market to push to this zone again, to these three levels again, 38.50 or 61, and then close bullish for us to jump on the bullish trend. Simple. We're not complicating, all right? So that's what we're going to be waiting. And if the market opens and it just continue going up without pushing to our fibs level, then we're going to wait for the market to bring another higher height, and then we'll use that as our most significant swing high. This one will be our most significant swing low, significant swing high, and then we'll wait for the market to push to our fibs level. Let's check on Euro Great Britain Pound, all right? We're not going to go, I think the currencies, after this, we're just going to select other major ones like CAD JPY, AUD USD, so that we should touch on almost all major. Let's make sure we touch on almost all major currency pairs. Now, this was a clear confirmation. Uptrend, this is Euro Great Britain Pound. Our uptrend was right here. Our most recent swing low on this one, remember, is right here. This is our most recent swing low, most recent swing high. So let's see if this would have been a good entry to even start with. So the market didn't even push right down to our 38% level. So we wouldn't have entered on this particular trade. So we're still waiting and hoping for the market to open, and we see it actually pushing to what? To our most significant, to our fibs level. If the market can push to our fibs level and then close bullish, this is where we're going to be looking to buy somewhere here. Stop loss there, risk to reward of 1:2. Euro AUD. This is awesome. I like this kind of yo. Can you guys see this? Damn it. The most lesson cross we had was here. We had that cross on the 8th of July, and today is the 13th. That was, I think, that should be around Wednesday last week. And the market has been in a downtrend. If we can measure this from here to here, this is almost about 38 pips, almost about 40 pips that the market has been moving down. About 40 pips. This is a lot of money on a currency pair like Euro AUD. But anyway, it is what it is. So let's just let's delete this. So our cross was here. This is the current market price as we speak. This would have acted as our most recent swing low. This one right here, most recent swing low, most recent swing high. So let's even plot our fibs to see if there was anything there that made some sense. So from now, you can see very, very clearly, the market didn't even push back to our 38% level to even begin with. So we are still waiting on this particular setup. If at the open of the market, you see the chart pushing up to this level. This is what I want you guys to pay attention, because these are scenarios where if you are just paying attention to the cross without having at the back of your mind, or if you are just paying attention to the moving averages level without having at the back of your mind that the moving average can cross, this is where you have losers. If the market pushed to this particular level at the open of the chart, most of the time at that particular point in time, you see the moving averages doing this. You see the moving averages crossing. So you instead be looking to buy. You instead be entering on a buy here because the moving averages have crossed. All right, you instead be entering on a buy here, your stop loss will go somewhere here, and you go for a risk to reward of 1:2. All this one is just called a gap. It's just called, this gap needs to be filled, or this area needs to be filled. So you're going to be entering and hoping for this. You can see how the market fall here. So you'll be hoping for this area to be filled. If the market push back to this area, by the time it's going to be getting here, I can already tell you for sure these moving averages are going to cross to confirm an uptrend. But if that doesn't happen, and then you can see the market continue pushing down, and then you're just going to wait, this is going to act now as our most recent swing low. We're going to wait for the market to start forming another swing high, and then we're going to bring our feet from year to year, wait for key levels to jump on a sell trend if the market continues selling. We are using the market direction as our point of reference. EuroCAD. What is happening on EuroCAD? So messy. These are the kind of pairs where I used to just see a support and I see a clear resistance. So this one, I can just say it's a clear support area. This one is a clear resistance area. So if you're someone who trades support and resistance, then instead of looking for a buy or looking for a sell, because you can see moving averages cross here, you would have already entered on this trade right here. If you were trading support and resistance, you would have already been on the trade right here. Because in Golub University, there's a detailed strategy just on support and resistance. Stop loss there, and you go for a risk to reward of 1:2, which your TP would have been right there if you were trading support and resistance. But if you are trading moving averages, and then we are in a downtrend, and the FIPS are confirming to us most recent swing low can be here, most recent swing high is here. So the market has already pushed up to our FIPS level. So if at the open of the market, you see the next candle closing bearish, you're going to be entering on a sell. All right, you're going to be entering on a sell. Let's go to this other pair, which is Euro NZD. Euro NZD, I can already, this is a buy. At the open of the market, I can already see a buy. Let's see our FIPS from here to here. Oh, not yet. It didn't push right down to our 38% level. You need to follow your strategy. You don't just jump into trade because of the fear of missing out. Follow your strategy. You can see clearly it didn't move right down to my FIPS level. So at the open of the market, I'm still going to wait to see if the price can push right down to my FIPS level and close bullish for me to buy. Or if by the time if it's getting there and I instead see moving average crosses, I'll instead be looking for a sell. So that's that for Euro NZD. Euro CHF, which is still another awesome pair. I'm already seeing again, we are still in a downtrend on this one. We had a cross somewhere here. The market is pushed back here, and I can already see sell. So a sell setup right here, because by the close of that candle, that would have been a key FIPS level. If we draw it from here to here, you can see the market actually move right up to a 61% level and then close a bearish. So if at the open of the market, if the market can just push back a little bit to this zone is this sell zone right here, because we would have entered right there, stop loss here on about 8 pips. So if the market can push right up here, somewhere here, you're going to look to sell. Or if by the time if it's getting there and you still don't get a bearish close, and by the time you're getting a bearish close, watch moving averages, because you can actually see it making something like this, where you see the two moving averages crossing. USD CAD, what's happening on USD CAD? 2-2 choppy. When I see 2-2 choppy sometimes like this, I just let it be, because you can see the market has just been trading on this. We can just draw this trend line and this trend line. The market has just been bouncing on this support and resistance for the longest. All right, for the longest. So I will just wait for it to either push here and a buy, or for it to either go up there and a sell. But now, if I'm trading trend lines, if I'm trading channels, this is called channels in trading. You guys can see I'm using a lot of confluences. So if I'm trading channels, what I will do is, if the channel is telling me that it's an upper channel or it's an upper trend channel, I'll only be looking for buy trade. If it's the downtrend channel, I'll only be looking for sell trade. In that way, if I go on a sell and I'm following that particular trend, I will hit my take profit very, very fast, as again trying to swim upstream. So in this case, I'm just going to wait for the market to push back right down to my support, and I'll look for a buy opportunity right here. Let's go to AUD USD. AUD USD still very, very choppy. If I can draw my FIPS from here to here, we can see our most significant swing low, significant swing high, So the market, yes, has gotten to our FIPS level. So if by the open of the market, we see the next candle closing bullish, we're going to enter on the buy. Clear. Moving averages, we had our cross right down here. We had our cross right down here, and we've been in an uptrend ever since. AUD JPY, I want us to be able to touch, was that AUD USD? Yes, that was AUD USD. AUD JPY, then we're going to go to CAD JPY and NZD. We need to touch across all major pairs. This one is clear. Look at this. This was our clear uptrend right there. Our most significant swing low would have been there. Most significant high would have been there. Our FIB is going to run from here to here. So we are still waiting for this to happen, for the market to push back to our 38% level, 50 or 61% level, and then close bullish for us to enter again on a buy. So we're just waiting for the market to do this push to our zones, or if the market open and it continue going up, and then we'll wait for the area where it forms our most recent swing high, and that's where we're going to be drawing our FIBs from this level where it turns to that level, and we wait for the another key area to jump on the trend again. Let's see CAD JPY. What's happening with CAD JPY? Similar structure. Remember, this CAD JPY, AD JPY, they all have a JPY, which is known as the safe haven currency. Remember, there's a safe haven asset and a safe haven currency. Safe haven asset is something like gold. That's why anytime you have something like a geopolitical tension where this country is fighting with this one, this is doing with this, many people tend to buy gold. You see the gold price going up because many people move to that asset as a safe haven asset. While at the same point in time, anytime there's geopolitical tension, you see many people moving their investments to JPY because that's a safe haven currency. So you expect most JPY pairs to rise. If you're trading something like CAD JPY, you expect it to instead drop because JPY is the quoted currency. If you're trading something like Great Britain Pound JPY, you expect that currency pair to drop because JPY is the secondary or the quoted currency. Unfortunately, we don't have any currency pair that has JPY as the first currency pair. If not, you see that currency pair going up. But in most cases, anytime JPY is strengthening, you will see those currency pairs dropping. So in our case, we had our cross right here to confirm our uptrend. Our most recent swing low will be this week. Most recent swing high will be there. Our feed is going to run from there to there. So wait for the market to push right down to here, 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 and then close bullish, and we enter on the buy here. If it gets there and unfortunately it doesn't close bullish and just continue going down, and then we're going to watch something like this where the fast moving average cross over the slow moving average from above. At that point in time, we'll instead be looking for a sell, stop loss, take profit. So those are all the scenarios. And if the market open and for it to instead push down, it continue going up, then we're going to wait for it to form another higher height, and then our FIB will instead run from here to there and wait for the market to push back to those FIBs level for us to look for another buy opportunity. NZD, USD, and then we're going to go to indices. We can't finish without talking about NASDAQ or US 100 or US 30. Very, very important. This one clearly is on a downtrend right there. Most recent swing high was there. Most recent swing low is here. So if we plot our FIBs, we're waiting for this market to still rally to our FIBs level for us to look for another sell opportunity or continue going down and form our most recent swing low where our FIBs can instead still run from there to there. Let's go to US 100. What's happening on US 100? US 100 was more like consolidating. Let's just delete this. You can see I was actively trading on this for the entire week, for the whole of last week. And there's something here which I want you guys to see clearly, which was this clear support and this clear resistance. You can see this support, this support, this support, this support, this support, this and this. So this is a very big support, and this one up here is a very big resistance. So if you're someone who trades support and resistance, play the waiting game, wait for the market at the open of the market, wait for the market to push right down here to your support, and then you wait for the candle to close like this, and then you enter there, stop loss, boom, or it goes right up there. This is just what they call, this one is just a flat, so you can enter on both the buy and the sell. Not if it was like this, if the channel was like this, then I'll only be waiting to enter on the buy. And if the channel was like this, then I'll only be waiting to enter on the sell. But if it's flat like this, then I can enter on both the buy or a sell based on where the price is going. So in our case, if the price comes here, you'll be waiting to sell, you'll be waiting to buy right here. So as soon as the market opens, you're just watching throughout the week, maybe on Monday or Tuesday. If the price gets here, you're going to be waiting to buy here. If it pushes right up here, you're going to be waiting to look for a sell opportunity right there. That's if you are using support and resistance, because the market has been too choppy. When it's too choppy like this, I wait until the channel is broken before I can continue using my moving averages. Let's go to US30, which is going to be, let's see US30. We had our cross right here. Most recent swing low is there. Most recent swing high is there. If we bring our FIPS from there to there, we can see very clearly that we're waiting for two things to happen: for this market to rally right up to our FIPS level and then close bearish for us to sell, or continue going down to form our most recent swing high, where we can instead run our FIPS again from here to here and wait for another level to enter. And by the time it's getting up here to give us a sell signal, if we instead have moving averages crosses to confirm an uptrend, then in that case we'll only be looking for buy trade. Very, very important. So that is it. I think we've touched across all currency pairs. Whether you are trading indices, we've been able to touch indices. Whether you are trading crypto, we've been able to touch on BTC. Whether you are trading Forex, we've been able to touch on all Forex currency pairs. Whether you are trading commodities, we have been able to touch on all commodities or on major commodities. If you want me to mentor you one-on-one, throughout the week, we're going to be having Zoom sessions with students in Hola University, where we're going to be trading together. We're going to be taking some of these trades together. We're going to be seeing how they play out together. We're going to be using other strategies. Remember, if you come here on my template, there's another strategy here which is even known as GUORB. We're also going to be trading with GUORB. We're going to be trading with GUASRO. We're going to be trading with a lot of strategies which you can only find that in God Love University. So this is a starting point for you guys. I want to hear testimonials from you guys. At the end of the week, post your trades on social medias. Tag me on it. Let me know in the comment section which trades you're going to be taking. Let me know in the comment section any question you have about Forex trading. Trust me, I only do videos based on the questions you guys have. I'm here because of you guys. I got this 100,000 play, which we're almost going to 1 million because of you guys. So let me know if you have any challenge on the comment section. Join me in Hola University if you want me to mentor you one-on-one. And if you're looking for a good broker that will actually pay you, you might do all of this and then you trade with a broker that won't pay you. Check the links on the video description to use the same brokers I'm using, to use my recommended brokers. And if you are already having a recommended broker, or if you just want a recommended prop firm that can give you big capital, also check all my recommended prop firms on the comment section that can give you up to $2 million to trade. My free Telegram channel is there, and most of you guys are not yet in my free Telegram. You are missing a lot. I share a lot of free info on my free Telegram. So also join my free Telegram. And above all, we're going to also be having a portion of our portfolio in robotic trading throughout the week. So check out Petrex Pro, which has won 3 years in a row as the most profitable Forex robot. All the links are on the video description for you guys to get Petrex Pro. If you're getting Petrex Pro from any other website, you're going to be scammed. You're going to be getting the fake version. What people do is they come to Hola University. Petrex Pro is a product of Hola University. So they come to Hola University, they purchase Petrex Pro, and then they go and do the crack version where they put malwares and viruses behind the bot. When they sell the bot to you for even $50 or $100 or $30 or so, that bot is having viruses. If you install it on your computer, they can steal your information. So please stop looking for cheap ways to get things. The only place you can get a certified license to Petrex Pro, which you can use on your pro firm accounts, you can use on your private account, is through God Love University, and you'll find the link on the video description. Any other link, any other website is a scam. Check out this video which shows you in detail the GUMVRO strategy. Also check out this playlist which I've prepared to for you to watch to prepare for the week, and also click here to subscribe to the channel if you haven't done so, and I'll see you guys on these other videos.